Chamber of Commerce at any point of time. It's a very interesting topic, insurance industry, the road ahead. Obviously, that's obviously challenging. And this particular morning session, I'm informed it is about the challenges and stories of untapped potential. Now, I've been listening to the previous speakers. They have brought to the attention of the delegates some very critical factors that is posing challenges to the insurance industry as we grow. And I would like to put my perspective from the non-life side, the general insurance side. In India, unlike in some of the other countries, most of the countries in the world, there is a China wall between the practice of non-life and life. Those insurance companies which have non-life cannot do life and vice versa. There are some countries in the world where an insurance company can do both. I mean, India is a different country where life and non-life has separate companies that have been established. For example, Future generally has a company in the life side, they have a company on the non-life side as well. Two different, and Bajaj also has that kind of operation. See, in non-life, one of the points that is raised against non-life, I mean, you have been there, and industry has been opened in the year 2000. Today we have about 25 non-life insurance companies here operating and vying in the market for a market share and business, out of which about 4 are completely owned by Government of India. And one is, again, an agricultural insurance company which is sponsored by these 4 companies. Then you have a specialty insurance company called Export Credit and Guarantee Corporation, which again works in a niche market. And there are other general insurance companies, with most of them with some kind of a FDI of global. You name the largest non-life insurance companies in the world, they are present in India in one form or another. So that is the market, and market last year, so 2015-16, we fell slightly short of gross premium collection of 1 lakh crore. It was something around 96,000 crores. When the year was beginning, all of us thought we would cross 1 lakh crore, but we didn't. Due to various reasons, we just fell short by about 4,000, 5,000 crores. The point is, I'd like to make as challenge number 1 is the penetration. You see, the penetration of the non-life sector in India is measured by a formula called total premium divided by the GDP. So that is now about 0.80%. I have not known the exact figures as on 31st March 2016, but it must be 0.81 or 0.82 or 0.79, something in that range. This is a weakness as the analyst and the market observers point out. You see the other countries, take Taiwan, take China, take Brazil, take Indonesia, take Malaysia, take Korea, they are all at 2.5%, 2.5%, 3%, and you are only at 0.80%, and this is an inadequacy of the market, of the industry. Obviously it is so, it looks like that. But then when we drill a little deeper into it, I mean, we did do that, but then we find out some kind of interesting situations. See, the countries which we are compared against, countries like China, Indonesia, Taiwan, the GDP consists of mainly of manufacturing segment. In India, 60% of your GDP is service sector. Probably, I may not be correct, but probably the service sector do not generate that kind of an insurable assets as much as the manufacturing segment generates. Possibly it could be one of the reasons that why we are struggling, because 8.80 or 0.79 seems to be a jinx. Way back when the non-life insurance industry was 10,000 crores, it was 0.70. When the non-life industry became 40,000 crore, it became 0.870. When it became 80,000 crore, again it was 0.75%. When it became 96,000, still we are in 0.81%. This seems to be a jinx figure. We are not able to break away into 2-3%, which they say the potential is there. There's no dearth of insurance company, there's no dearth of product, there's no dearth of distribution channel. We have 25 companies with high-end technologies and high decibel advertisements and high decibel information in the market. So that is the issue here. Possibly could be the predominance of the service sector in the country. There is another one which now we are thinking about. Is it because the general insurance industry is not accepted by the customer as a thing that they should go in? No, out of this, we have done some kind of figure. There's no exact data available. We assume out of the 1.3 billion population, we are covering around 40 crores of population has been touched by some kind of general insurance policy or other. That is the general kind of impression, 40 crores. This 40 crores itself is substantial because it is more than the population of many countries. To that extent, we say that 40 crores is an impressive figure for covering 40 crore of people by some kind of non-life policy. It's a very impressive performance if you take it standalone. But compared to the 1.3 billion, you say you have a huge potential. Now, here comes a problem. Why are we not able to spread rapidly? For example, let us take the case of Jammu and Kashmir earthquake or Uttarakhand floods. It was devastating. See, the economic losses created by these calamities, like 25,000 crore. For a Chennai flood, it says it's cost an economic loss of 25,000 crore, but insured losses are only about 4,000 crore at the net revenue. So there is a huge gap. People have not been insured, obviously. If it is a developing country, it should have been as high as 60 to 70% of the total economic loss would have been met by the insurance industry. In Chennai flood, it did not happen. In Uttarakhand, it did not happen. In J&K earthquake, it did not happen. Where is the problem? Is that a credibility barrier here? Does people think that insurance companies promise a lot of things? Their policies are very complex, but at the time of claim, that is called moment of truth, they pull out all the fine print and say because of you did not do that and you did not do that, condition number 23, you will not get the claim, or if you get the claim, you will get only a little bit of that, what you have claimed. Is there an impression like that? Do people feel that it is a very complex kind of a situation? Is there an awareness gap? Is that really stopping us from exploding the penetration from 0.80 to higher percentage? Is there a distrust element among the population to insure? Otherwise, why? There were no long queues in front of insurance companies in Chennai after the flood to take a flood cover. There were none. Nobody turned up. Except that we kept on pushing the product. It was never, pull effect was not there. But everybody knew that there was a flood cover, there was could be 10. Flood cover is a very, fire and property cover for your house, residence, shops, establishments. It's a very cheap cover. People are taking cover to our experience, which is mandatory as in terms of motor. Even in motor insurance, the data shows about 20% of the vehicle in India are not insured at all, despite the mandatory position. And also, bank loans, financing, they insure the products. And when hospital costs are being high, there is a demand for health insurance. But what about a demand for householders insurance, a professional indemnity policy?